Hello, Rick. Welcome to the show.
Hello, Jeremy. Thank you for having me.
Thanks for being on today. It's great to see you. As ever, the first question is, how did you get where you are today?
Yeah, it's. I came into the insurance world in a less direct way. I was introduced to the world of banking by my father, and it became really my area of focus. So I started things out with an MBA, but then the credit crisis hit, and I became really interested into the quantitative sciences, risk management. So I studied insurance sciences at the University of Amsterdam, and became bitten by the insurance bug. I had to calculate the impact of the quantitative impact study number 5 on a balance sheet, and that was just great fun. So I actually joined the city and tried to get into it and everything, but it became a very difficult environment, and I just had such a passion for insurance. So I ended up deep diving into it from there. Yeah, I became really connected to the actuarial profession, working amongst particular software vendors, actuarial consultants, and just the actuarial sciences in general. So I navigated myself between Solvency 2 and IFRS 17, and it was just, intellectually speaking, a very stimulating environment. So I really enjoyed that. And at this juncture, I'm working for a great company trying to progress the actuarial sciences, pricing in particular, of course, and living in the Netherlands, which previously I've lived 20 years in the UK. So, a bit of a different direction, but it's where, for personal reasons, it's the right place for me to be. So, yeah, very curious where the next path will take me.
That's brilliant. So, what made you move to the new company that you're with?
Yeah, Maven Blue is, to me, a really exciting company. Exciting because one of the big elephants in the room that few people actually discuss is how you get a tariff to market. Obviously, for certain vendors, it is part of the mix, but it becomes part of their ecosystem and you need to commit to it. With Maven Blue, it's a very different approach. It's a very open philosophy. So the actual deployment of rates is completely, whatever modeling platform you use, you can take that to market in a very convenient and direct way into your policy admin system. So it's a different approach, a different mindset, and it's just a group of very passionate, very driven individuals, very intellectually curious about the actuarial sciences and pricing. So it's just a very stimulating environment to work in.
Yes, it's good to know. I've seen the Maven Blue product, the rating engine myself, and I do think it's a really good piece of software, a really great kit. Do you want to tell me about the things that are the benefits of it?
Yeah, sure. No, absolutely. Yeah. Maven Blue, of course, its founding sits in individuals that came from one of the leading policy admin providers in Europe. Obviously, Keylane with their product called Axon. It's widely popular in the Netherlands, but also Belgium and parts in Scandinavia and other areas as well. So it's done really well. And those founders founded Maven Blue. So they've got a very rich understanding of the operational limitations or issues that insurance companies face. And the way in which you configure a price in your policy admin can actually be quite complicated. So making that easier, that is the critical juncture. So there's a few components beyond that, which of course we're able to achieve. One of the things that we're very excited about is the ability to monitor the performance of a tariff in the market. Let's say you create the necessary demand models and you have an expectation of how that model performs in the market. You can then compare it to what you're actually doing, and there is a machine learning algorithm that will actually try to optimize between the two. So if you're falling short of expectations, over concentrated in certain parts of your demographics or overall risk exposure, you can then tweak your pricing to ensure you're going to get to the right exposure level that you want in terms of diversification, in terms of volume, etc. So it's you're able to really quickly, with in relative terms, very little headaches, you're able to achieve quite sophisticated levels of pricing, and that's quite unusual because some of the providers out there, you're going to have quite lengthy processes to engineer things in such a way that you're able to achieve these things. So yeah, it's a unique approach, very different, and I'm happy to engage with anyone who wants to see it, try it, experience it. Absolutely.
Yeah, that's brilliant because I was very impressed with the MI tools just for a start because it's great to have all that information in one place and the setup is so easy. And also the option to be on rails with things so you could take a small team and do quite sophisticated work very quickly without needing to build everything from scratch like you have to with other tools or indeed if you work open source. So, Rick, what would you say is your mission for pricing?
Yeah, it's a good question. I've worked in pricing for quite a while, and you get different perspectives. You obviously have your companies that are for profit, if you will. Sometimes you're talking to those that are mutuals and have more of a communal focus where they're trying to enhance the community. Yeah, my ultimate goal is, of course, to help the insurance companies balance the relationship between the prices that you charge and the relative amount of value that the customer is getting. If everything goes well, those two are in harmony and the customer gets the best possible service for the best possible price, while at the same time the insurance company is financially healthy and productive. So yeah, that's my main vision, my main goal to achieve. And that of course means that things like customer discrimination, that those things are sought out proactively and of course identified and addressed.
Excellent. It's very good to know. Very good to know. And what would you say is your vision for pricing?
Yeah, this is an interesting question because I think the question becomes what are going to be the biggest hurdles for insurance companies facing some of the future challenges. And looking at how things are going right now, I'm really worried about inflation and the affordability of insurance. I think that's going to be a very serious point because I don't think we're done with inflation. I don't think inflation is going to go away, and there are possible supply side areas where inflation could suddenly sprout up again, and then we're right back at square one. So affordability is, I think, a big question mark. And if you're quite innovative in your thinking, you don't necessarily need to reinvent the wheel to be giving customers a more affordable product. I give you an example. Everybody has really been obsessed with UBI, giving customers more of a as you use product, as you use it less or you're less risk, then you get less of a premium. And I insurance, they struggled with that. They really struggled because on the one side, getting the data has been incredibly challenging. On the other side, you're going to hit very natural points of debate. If I have a good customer, I want to lower his fees because he's been so good to me and he's been low risk. But that also means that when you have a driver that's bad in his driving, that you need to penalize him. And it's difficult to make that argument to that person. And I just think that there are better ways that are maybe not as technical, but just require a new approach to thinking about how you develop a product. So if you look at a mobility insurance product where you just look at the overall travel profile of a customer. That person can travel by train, by bike, by car, by scooter. There are all sorts of possibilities. And on the day that I decide to travel by train versus a car, that I get something of maybe some money back or a benefit or some extra cover. I have no idea, but there are ways in which you could see how that kind of behavior could reduce your overall risk exposure from an insurance perspective, and that could be shared. So I see that happening. The other thing that could happen is, and this is a crazy notion, but I think it has legs, is a multi-year P&C policies. So having a car insurance policy, which is not just a single year policy, it's such an assumption that these policies are single year. But I think if you have a multi-year policy, then the relationship with the customer changes, and potentially also your overall perspective of that risk, because you get a far greater premium over the course, and you get that assurance. You avoid the acquisition costs for customers. So there are a whole bunch of benefits to the insurance company that I think you can then also in part pass on to the customer as well. So I see things like that happening. The other concern I have looking to the future is customer behavior. We've seen quite dramatic changes in behavior. Things like COVID-19, they changed how we operate. For example, we had things like home insurance and leaks. If you look at water damage, that suddenly in home insurance decreased dramatically because everybody was working at home and they could turn off the water when they saw the leak. But if they were working from the office, then they wouldn't see it and they were too late, and then the damage happened. But then all the water damage exposure came at the businesses themselves. And these behaviors, they have a very profound effect on the overall claim rates. So I can see technologies, I can see pandemic or other things. When new technologies, for example, hit and the behavior of customers changes, then I can see how that can affect the overall risk landscape. And that has pricing implications, because when that behavior changes, you need to be able to price it accurately. And if you don't, someone's going to pay for it. And is that going to be the financial health of the company? Is that going to be the customer? Someone's going to be disadvantaged. Yeah, having a responsive, dynamic pricing process, I think, is critical to respond to those kinds of things.
Yeah, definitely. The world is always in motion, and there's only so much we can really get from our past data. There's always the need to be looking forward and knowing what's going on in the world and how it's changing.
Yeah, absolutely. So yeah, for me, those would be the main points. Sustainability could be another point. How do you bring sustainability aspects into pricing? And that's really tough. That's really
Yeah,
tough because you're going to hit some very natural hurdles, i.e., a big battery is an additional risk.
yeah,
A solar panel on your roof is an additional risk,
yeah,
but you do want to benefit those people. You do want to reward green behavior. That's still a very active debate right now that I think in pricing will have implications, but where that's going to land is unclear, but it's a very active debate.
yeah, definitely. I like that idea of a longer than a year policy, particularly for younger drivers, actually. And perhaps if we could offer some more useful services, such as helping people to learn and develop better driving behaviours. So risk mitigation alongside the insurance, and the same with home, in fact.
Yeah, absolutely. And I can see how interconnected uh, home insurance, where you have security systems and all kinds of other physical things that you can do to improve the
Yeah.
home
Mm.
security. If you apply those things, if you monitor those things, if you communicate with your insurer about those things, they can have a profound effect on the overall risk of that setting. Yeah, I think there's a quid pro quo for both parties. to then
Yeah.
engage. And I see great benefits to engagement between the triangle of the insurer, the customer, and companies that provide security services.
Yes, definitely. Yeah, and the leak detection as well, and the other useful items and devices that people can be doing, and the behavioural changes as well.
Yeah, no, agreed.
Brilliant, Rick. Okay, is there anything else you'd like to add?
No, I think at this juncture, I think I've shared some of the thoughts that are on my mind. I'm very intrigued how things are going to go with AI. I think that's going to be a very challenging topic. Challenging because we're not going to worry about people writing into their AI code explicitly that they want to do something negative, discriminate, or whatever. With AI, we're always worried about what is going to happen implicitly to the model. Things
Yeah.
we can't explicitly see, but do happen and are negative in their consequences. I think that's going to be an interesting field as well. That you can build all these fancy, exciting AI models, but if you don't cover off the impact of an AI model, if you don't do the data science there, then that's going to be tricky for insurance companies to apply AI at all.
Yeah, I think it's a common problem in other industries as well. But yes, definitely, it's difficult to see where we go at the moment. It's very promising technology, but the issues with it are apparent, and they don't seem to be going away.
No, and it's not the first time AI has been around. It's got more promise now, and I do agree with that. But sometimes it looks like things like machine learning have more promise at this juncture to really deliver on some of the expectations than AI does, because there are some critical areas where you just can't get over that hurdle. It just remains something that stares you in the face that you can't quite get around. So that's going to be interesting to see how that evolves. It's not a well-defined issue at this point.
Yeah, it's not very clear cut, is it? I find it quite interesting how it feels almost like it's pretty useful when it's a helper to a person, but it doesn't seem to work well when it's let loose without the person watching it. And it's really interesting from the point of view of it's an automation tool, but it's an automation tool that needs someone to babysit it.
Yeah, and what's happening in the background, really difficult to see. Yes, you babysit it and you look at what it's doing, but can you really feel and see the impact of what it's done? You look at the surface and you make a judgment, but it's very difficult to get around the fact that you don't really know what's going underneath in detail.
Yeah, it's interesting to me how it's meant to mimic the brain and actually, in many ways, has the same problems because we can ask ourselves, why did we make X, Y, Z decision? And we can justify it and rationalize it afterwards, but we don't really know that's why we did it. And it feels like it's got the same issues.
Yeah, it's funny, huh?
Mm, mm.
Yeah. I think Elon Musk said that there is something because they use AI to advance the computational capacity of the chips that they use to run AI with. So incrementally, they're getting faster and cheaper at executing these AI models, and it's something like a growth rate of a 10x per month. That's how fast they. The statement is of Elon Musk that by 2027 we're going to get a artificial general intelligence by 2027. I think the statement was. That to me was quite profound because it has quite significant implications. Because it's
It,
quite
it,
soon.
it does. And that Elon Musk did promise driverless cars about 10 years ago now. So I'm a bit cynical on that.
I'm cynical on that as well, and the driverless cars, by the way, is really interesting because of the Tesla insurance numbers that came out not too long
Mm.
ago. That was quite alarming.
It is, yeah. I think On the one hand, they were aiming to lower insurance costs for their customers, so to some extent they've done that. Whether they're intentionally subsidising it or not, I don't know.
Yeah, they're in a very difficult spot because it's very difficult to provide this sort of captive insurance capacity for
Yeah,
all Tesla cars
yeah,
without concentrating your risk. Part of uh, these big insurance companies around the world doing the way they're doing is because they've got a very diversified portfolio of exposure. And concentrating your portfolio on electric cars,
yeah,
on a particular type of electric cars,
yeah,
with an autopilot that you get a certain driving behavior, not just because of the autopilot, also because of the accelerator button being quite so people
yeah.
do. And so you get this portfolio, which, you know, if I were working for them, I'd like to diversify if I could, or I'd like to work with another insurer and try to get some diversification benefits and maybe lower my overall claims burden. So yeah, it's they're in a difficult pickle, I think, trying to do what they're looking to do.
Yeah, definitely. They're choosing to write only the specific car, their own cars, which are new, high performance, uncertain, high. They're expensive vehicles.
Yeah,
They're lots of what we would probably call red warning signs to writing a portfolio, and then they're writing only those. So it is hard to see.
yeah,
Plus, one of the things that gets forgotten is that when it comes to insurance, it's not really about fixing the Teslas. It's about fixing other people's cars and dealing with the bodily injury claims, and that's a different skill set to
absolutely.
the ones that they'll have.
Yeah, absolutely.
It's interesting to see. I don't know. Do you know if anyone is still really seriously pursuing AVs? I know they might be saying publicly they're working on it. Maybe Waymo is still in, but Cruise seem to be pulling back.
Yeah, I don't know. I don't know. It's also you need to define an AV because I
No,
think
that's
the
fair.
definition might
Yeah,
become different than what we were initially promised.
yeah,
I think we're going to get vehicles that have a degree of self-determination,
yeah,
but at critical points will rely on the driver to input. There has been a very significant update to the Teslas. Obviously, there
yeah.
were all those accidents so many years ago, and then
Mm,
they did a big recall, 2 million cars not so long ago. And I think that should signal that updates have been made, and hopefully that all works better. I don't know, but yeah, I think we need to define what you expect from an AV.
yeah, that's fair. Is that a case of people with lowering their expectations, though, moving away from we'll reach level fives soon to we're probably going to get comfortable at level two, level three?
Yeah, if you look at EU regulation, for example, there are regs to say that a driver will always need to keep their hand on the steering wheel.
Yeah,
So you're always going to have some sort of minimal input assumption from the powers that be now in Europe.
yeah,
So I think that will have an impact on how these cars get developed. But yeah, I think we're going to become quite happy and satisfied with level two and three.
yeah,
I'm not sure level five becomes insurable. The risk is the question also is who pays, eh? Because at a certain point you're going to reach. Let's say we reach your point where it's all hands off and I tell my phone where I want to go and the car takes me, kind of thing. Let's
yeah,
if we get into an accident, who's liable? And at some point you're going to cross into a gray area where the producer of the vehicle becomes the carrier,
yeah,
and that in insurance terms I'm not sure those companies are capable of providing, or is something that you can insure because the downside, the risk becomes exponential because you could have some of those what I would call nat cat events where
yeah,
that the vehicle is hacked and some sort of malicious code is introduced. And I have no idea what's possible, but I can see how that could snowball and become quite toxic.
Yeah, I can see issues there as well. I think ultimately the cost is going to be passed on to the end consumer in some way. We just don't know what the shape of that is going to be. But indeed, the aggregation of risk could be quite an extreme problem. Actually, if people do update, every car gets updated with new software at once and there's a problem with it, what is going to happen?
Could you imagine a world in which you buy a car and for the lifespan of that car, you have an implicit level of insurance cover? Would be quite crazy.
Yeah, potentially. It will probably be that people will in some way pay for that, possibly through some subscriptions or something like that. We'll have to. It's like we're saying, the world changes too much for anyone to be sort of setting their insurance level right at the start of the contract when they sell the car. So it's hard to see where it goes. But ultimately, I think they'll still be reliant on an end consumer that covers the cost in some way and an insurance body that soaks up the risk in some way. And it's how you join those two together that I think is going to change.
And it's also insurance companies have been so good at the balancing act between the different kinds of risk they're holding, generating free capital, overall relative efficiency with which they deploy capital and insure risk. And it's very difficult for these relative new kids on the block to completely take away that business model because it's so
Yeah.
cemented in size and sophistication that it's a slow burn to try and achieve that kind of. I think the insurance companies we know and love today that are of significance, it's going to be very difficult to challenge those in a meaningful way because of their relative size and sophistication in how they run things. Yeah, I agree with that.
Yeah, definitely. Insurers have got a lot of money. Ultimately, they can do a lot with that capital when they need to.
Yeah.
Okay, Rick, it's been really great catching up this afternoon. Thanks a lot ever so much for being on the show.
Thank you. Thank you very much.
Brilliant. You have a good rest of your day.
You too. All the
Oh,
best.
cheers. Bye bye.
Bye.